Dear leaders and executives of IAFEI Institutes, honorable guests, VIP moderators, and speakers today, I'm David Chou, Chairman of Financial Executives Institute, Chinese Taiwan, and partner of Sarah Group in the Silicon Valley. It is my honor today to share my experiences regarding SPAC since 2002. Today, my presentation will have 5 parts. First, very briefly about myself. I have conducting cross-border transactions of investment, including venture capital, private equity, and angel investment, and investment banking, merger acquisition, listing, funding, business facilitation. For the past 25 years, I have completed over 50 cross-border transactions with a total amount of $7 billion US. And I have served as financial and strategic consultant for over 300 companies in Asia, Americas, and Europe. I have also evaluated over 3,000 deals, including Alibaba. I graduated from Columbia Business School in '95. And I do have extensive Asian and international networks. In my Outlook address book, I have over 31,000 people there because I do, as I mentioned, I conducted cross-border and cross-sector transactions. I do need expertise in different sectors in different countries. That's why I keep my database big. These are the transactions I have completed. As you can see here, Auto China SPAC listing, which I will elaborate a little bit later. And these are the VCP and angel investment I have conducted, including Alibaba. My previous fund was the first ever investor back in April '99. And others, I have several other deals with over 30 times returns. For merger acquisitions, I have been helping companies in Japan, Taiwan, Sweden, China, US, and other countries for M&A. And I also help over 10 VCP and angel funds for their funding and establishment. For business facilitation, I help companies not in Greater China looking for their counterparties in Greater China, such as suppliers, buyer, channel, OEM agent, and vice versa. I have been serving at Financial Executives Institute, Chinese Taiwan for over 19 years, 15 years as Secretary General and 4 years as Chairman. And I'm a partner of Sarah Group in the Silicon Valley, world's largest structured angel fund group with 11 funds and over 120 portfolio companies. Several of them are unicorns. And we have over 400 elite investors, such as AT&T Chairman, Visa CEO, G Healthcare CEO, Apple QuickTime founder. And those investors not only contribute capitals, but also deal sourcing, evaluation, and post-management. That's why our success rate has been very high, 62% versus the average of 11% in the Silicon Valley. And our portfolio companies, their follow-on round has been invested by many reputable investors, such as Intel, Bill Gates Foundation, Alibaba, GSK, Pfizer, Merck, and those are some certain companies with decent returns. This is the first ever investment we made in Asia, which conduct cross-border payments legally, safely, quicker, and much cheaper. And for those who are interested, you may contact me after the webinar. And the investors also include SoftBank. And I'm also the Taiwan rep of SI International, which was founded by Stanford University in 1946. And SI International is an R&D and commercialization institute. And I do have other titles here. And these are topics and expertise I'm good at. So in conclusion, I have been conducting cross-border transactions and resources integration. And then talk about the case studies of SPAC. The first time I interacted with SPAC was back to 2002, 19 years ago. My previous fund was, offer very good valuation to a target company. We thought we are going to win. However, we lost. And the winner was a SPAC with 2 months remain. And they offer ridiculously high valuation because it will be troublesome and shameful if they were not able to complete the transaction. So timing will be something important for a SPAC, which I will elaborate a little bit later. And the second case is about Auto China. The target was the largest truck dealership and financing company in northern China, acquired by SPAC and renamed as Auto China. The company went well for several years. However, its chairman and CEO were detained because of legal troubles. So here comes the criticism or the drawback of SPAC is about the corporate governance and transparency. And another case is the Pinta Marine, which is the largest ocean shipping fishing company in China, acquired by SPAC and renamed as Pinta Marine. However, the share price were a disaster. And again, it's because of the corporate governance and transparency issue. So from 3 cases above, we can see actually, for the unlisted companies, they are pros. To go through SPAC for listing, it's quicker and lower disclosure and lower cost. And for those countries with high restrictions on listing or with quotas, then SPAC will be an ideal solution. And underwriters usually they tend to underprice IPO price, but for SPAC actually there is no concern about that. Actually, as I mentioned, there are 100 SPACs right now in the market and they are hungry for deals. So the valuation for acquisition should be high. But on the con side, transparency, again, corporate governance, and there will be conflicts between sponsors, which are the founders of SPAC, and business owner of the target company. So from the unlisted company's perspective, there are 3 approaches to go IPO, to go listing, which are IPO, SPAC, and shell listing. And in terms of regulation disclosure, IPO is the highest, SPAC is low, shell listing is low as well. And IPO will take a long time, SPAC is the quickest. Shell listing, well, you need to buy a shell first, and then another transaction for the acquisition. So it's a little bit longer. For cost, IPO is pretty high, especially in the US, like 5% to 7%. For Uber, the underwriting fee was over $100 million US. And for SPAC, which is very low, for shell listing, you need to buy a shell. So for the risks is, what if go through IPO, the company is not qualified? And for SPAC, actually, as long as the company is good and there's no issue, as mentioned, there are hundreds of SPACs out there in the market. And for shell listing, the biggest concern is about whether the shell is dirty or not. So for investors' perspective, pay attention to sponsors' reputation, track records, transparency, corporate governance again. And the most important thing is the business fundamentals. Do not speculate. And it's important to find sufficient and reliable information source. And the orphan stock issue, which I will elaborate soon. So there are several consideration factors for listing, about where to list, your home exchange, USA, Hong Kong, Singapore, London, other places, and each exchange has its pros and cons. And it's like marriage. It's not to find the best one. It's to find the most suitable one. So there are several, consideration factors, and everything, every deal is case by case. And if you want to go through the SPAC for listing, then how to select the SPAC and how to deal with SPAC is there are several, consideration factors. If you want to go through the IPO, then how to select the underwriter, will also be a task. And either way, you have to hire professional firms such as accountants, lawyers, and appraisers, and you also need to integrate opinions from them. And it's better to hire a decent and experienced investment banker to help you, and not only to integrate, but also for the execution process, monitoring and control. I mean, for timing, and for others, for pricing and others. According to Wall Street Journal, in the past 30 years, those companies hired decent investment bankers enjoy averagely 30% higher selling prices than those do not. So, I mean, it's better to hire someone experienced to help you. About the listing, exchange selection, and also the orphan stock, let me elaborate here. Here's a company based in Asia, which is the world's 5th largest semiconductor packaging and testing group. And they were listed in the US, suffered from very low PE, only 5 times, because F1 filing, time difference, CFO was incapable, a small underwriter, no listing comparable, and other factors. So I suggest a company they listed from US and relisted in Asia. And right now they enjoy 18 times PER in Asia. So listing exchange matters. So the conclusion is, for unlisted companies, listing through direct IPO, SPAC, or buy and sell have their respective pros and cons. And for investors, business fundamentals are still the most important factors, and avoid orphan stock. There are a lot of listing consideration factors. Better to hire a decent investment banker with track records and international networks. And those who hire, the decent investment bankers enjoy 30% higher selling prices. So here I conclude my speech today. Thank you very much for your time. Please ask me any question in the Q&A session later on. Thank you.